Okay, hello and welcome everyone. Thank you for joining our technical analysis webinar with Trevor Neal. As always, the webinar will take approximately 30 minutes of your time. And don't forget, if you have any questions for Trevor, you can ask them in the questions tab of your go-to webinar window, although I'm sure that you're all familiar how to do this now. We hope you all find the handout last week very useful, and we've attached it again this week to the handouts tab. So just below, well, it might be different for different people, but for me, it's the tab just below the questions tab, and the PDF is called Chart Key. This handout will explain what each of the indicators are on Trevor's charts, and will provide a bit of insight into what Trevor is thinking about when he uses them. For those of you who don't know him, Trevor is a veteran trader and technical analyst. He's been trading since 1974. He managed a large hedge fund in South Africa and worked as a global head of technical analysis at Bloomberg. Well, that was a mouthful. You need to take more. Need to take a rest next time. He's also a founding member of the Society of Technical Analysts in London. So let's get started. Massive day today, Trevor, in the stock markets. Dollar taking a hammering, but all stock markets up. Nikkei at a level not since 1992. Bitcoin rampaging. Trevor, please help us make some sense of it all.
All right. Okay. Well, there's plenty to talk about today. Big action today. Let's start with the dollar. The dollar, as such, has been in a long-term downtrend. It's had a sizable and powerful rally lately, but now it seems like the downtrend is reasserting itself. But just as I say that, we see that it perhaps is strengthening a bit today, right now. But what we can see here on the euro, this is a daily chart of the euro, is a very clear range, and we powered up to the top of the range, and it looked like we were going to be very strong here and tackle the upside of the range. That's not happening at the moment, but it is. The thing is that the euro is not the one that is benefiting the most from the weakness of the dollar itself, and I'll show you that in a moment. The 116 level obviously was key, and we were there only last week, and now we've moved up to the top end of the range, 119.45. If we do clear that, we would be heading for 118.80, I would say, and that would be an 8-week high. So Bollinger Bands are looking good. I think that we've got to wait a little bit longer before the euro makes its break. So the euro is not the most interesting play against the dollar. Let me move on to the pound. The pound is teasing this important 131.50 level here. Earlier this day, we seem to be through it, but as the day progresses, as the dollar rallies a little bit into this evening, it's turned down again. So it could be that we have failed to make the break to the upside. The 161, the 61.8% support level held us. It was a level we talked about last week. It held us, and we did power up from there. If we manage to break out of this 131.50 level, which we did do earlier in the day, but we're not currently, then we'd be at a 45-day high. I mean, that's impressive considering the background for sterling. After that, if we do manage to get back above here and we're not failing once again and staying inside the range, then we should have no trouble going back towards the 134, 33.60, 34 high there. But at the moment it's hesitating, having looked good and looked as though it was going to stay above the resistance level. It's now under pressure again, and it may be that we are faltering here and remaining in the range. If we do remain in the range, there's very good support at 131.50 and the 132.50 area, but I think that and that will hold any pullback that we're having now. I want to talk also about the Swiss franc, because it's at an extremely important level. I want to draw your attention to. Let me just go to the weekly chart now. The weekly chart, so every bar here is a week. Now look at this here, this importance of I should bring this line down. I'll bring it down here to 90.9 level. Look how very, very important that is. The Swiss National Bank will not be happy to see this upward pressure on the Swiss franc once again, testing very hard the 90 level. But today, I don't know if there's been intervention, but today it has held that 90 level once again, powered back up here. So I wouldn't be surprised to find, when I read the reports later in the day, that the SNB has had a bit of a hand on this. This is a red line for them. It was under threat, and now we've bounced again. But I tell you that the pressure is very high for this 90 level to give way, and maybe one day they will not be able to hold it. But it's there. Everybody can see it. We know what the importance of it is, and on this occasion, we have bounced strongly from it. Last week we talked about the NOK, the Norwegian crown, and so here it's this moving down is the dollar moving down, and the strengthening of the NOK itself. So here's one of the places you can very clearly see pressure on the dollar. Very, very clearly, and this is a very good place to capitalize on it, because this one is breaking down, looking very toppy. Isn't this a double top here? We've broken now the pullback level of it. I'll take some of these lines away to make it clearer in here. So high, same high. The low in between is here. We've broken it today. This indicates a move down to 1, 3, 4, 5, 6, 7, 8, 9, 10. I'm counting the height of the pattern. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. It will take us down to the August lows for the dollar if we fulfill this count. And I do think that we're going to do, and this, if you want to take a bet on the weakness of the dollar, I believe this is a good place to do it. The Australian dollar here. So last week we said the Australian dollar almost got to its round number of 70 there. It's only a week ago that we were there, and which was a target after the flag breakout, but that's now back in history. It got an electric shock at that level, once again holding that level, that big round number, and that crucial level which is historic. And the Australian dollar has bounced strongly from there. Another great participant in if you want to play the weakness of the US dollar. So it's bounced right through its recent range here, and last 5 weeks of trading has now become support, in my opinion, for this market, and we're in good shape for a successful attack on the September high at 74.10. So back in here. So I think that now this is a big area of support which will hold us and allow us to go up here. So if you are buying into the dollar weakness story, this is a good place to do it. I'll mention very quickly and briefly the Rand and the Mexican peso. I'll mention them together. They're both big beneficiaries of the dollar strength. Look at this is the Mexican peso here. This is the dollar going
strength down. Sorry, Trevor, did you say dollar strength? Did you say that?
The dollar weakness. Sorry, dollar weakness. Yeah, thank you for picking me up there.
No worries.
Chart. This is the dollar weakness, and the trend is powerful here. We've got a very big base down here around 20, but we've got a bit to go for it. So I think this is, if you want to really leverage up your bet against the dollar, then this is a good place to do it. But also the Rand as well. And look at that collapsing the way it is. I'm going to the weekly chart to just get perspective here. The big support comes in around 15 for it, and we're approaching that now. But this, the Rand is a big beneficiary of this. It has been so bombed out, and so is the Mexican peso. In fact, all the emerging market currencies should be the leveraged beneficiaries of weakness in the dollar. But if you want to keep it closer to home, then the Norwegian crown would be probably your best bet. Now I get the chance to talk about Bitcoin.
Actually, Trevor, just before you go into Bitcoin, we've had a request to look at Canadian dollar. Do you think you'll have time?
Yes, I have got time at this moment. We're ahead of time. So Canadian dollar here. So here we are. So it's this move down is weakness in the US dollar. A good point, actually. Canadian dollar breaking this very important low or high for the Canadian dollar, but low for the US dollar of 130, 129.90. And at this very moment, thank you, whoever drew our attention.
That was Noble Thomas. Thank you.
Ah, Noble, our friend. Yeah. Thank you very much.
Yeah.
I think that was a sort of implied criticism because I'd missed it out. And it is an important break. He's absolutely right about that. Just go to the weekly chart to show the importance of it. We're plunging into this area here. It is an area we were at, although we're breaking this low, which is what we were looking at before, these lows here back in January of this year are still intact. But this is a very, very important level. Let's just show a bigger picture of this. Let's go back 5 years in it to show how important this is. This is, you know, we'll put all this trading action above us if we break down below it. So this is a major, I had labeled this up, major support zone, I've called it here. We're not quite through it. We're through the most recent part of it, but we haven't cleared it. So this could be quite you know, profound if we carry on going down a little bit more from here. We will have put an enormous amount of trading action above us, which will be resistant. So thank you very much for that one there. So now let me go to Bitcoin. You know, I've been banging on a bit about Bitcoin. I'm a big fan. I am a portfolio manager. I do see it as an asset class, which is not correlating with the rest of my portfolio of grains and metals and so forth. This is a weekly chart here, and we've broken, obviously, clearly broken through the resistance of the June 2019 highs. Let's bring in a bit more. Let's bring in all the history here. So where are we? We're pushing up to tackle the 2017 highs, Christmas 2017. What a Christmas that was for many people who decided to cash in some money to buy their Christmas presents just before the market topped out at the end of the year. The move up here that I've drawn using Fibonacci and giving me this 2100 target up here, 21,000 target here is drawn in this way. I did this some time ago, but let me do it again. I'm taking the big count here, which we must do because we're in a big move here, and it's a big, you know, we need to do the big counts in order to get the kind of objectives that we're after. So I don't know where you want to take the beginning of the move, but I'm going to take it down here. It was around $60 or so. Sorry, I need to go a bit higher to get all that in. We measure up to there, then we measure the pullback. Maybe I'll be better starting this again. Sorry.
Take your time, Trevor. Take your time.
Fluffed it. Oh my goodness, what have I just done there? There we are. And I want to bring in 5 years worth of data, so I need to bring that up a bit. So I want to start here. Okay. From that low up to the 2017 high, then back down to the pullback low here in 2018, December 2018, when we made our low here. Now what I've done is I've measured that impulse move there, and then I've said that's when the bulls had total control, that's what they achieved. Then when the bears took over, in 2018, and we had the big sell-off and the big break from 6,000, the collapse down to 3,000. So the bears were definitely in control here. That's what they got. When you look at the relationship of how much the bears could achieve compared to the bulls, it was a lot. But now look, we're on our way up again now. So we take the length of the run up from the bulls, if you call this A to B, then add it to C here. This takes us, we've just passed through, when we went through 14,800, let's call it 15,000 here, and it does look as though we're through that now. This should take us back, this should take us to the 100% level. So what this is 100% of that move added up onto the 2018 low, takes us up to actually to 22,000. I had 21,000 when I did the measurement earlier. I think I took a little slightly lower high when I did it. So 21, 22, but through 20,000, through the previous high here, which was just shy of 20,000, was 19,050, something like that was the high. And I think that we're on our way to it now. And there's very little resistance, trading resistance here to stop us. You know, we didn't trade there for very long. It was a very fast move. There, you know, it was up there and it was down very, very fast. So there isn't a lot of resistance. You know, there is, when you consolidate like that, there's a lot of support and resistance because we spend a lot of time trading there. The trading was very brief. So I don't think the old high will represent strong resistance. So as you can tell, I'm pretty bullish, remain pretty bullish of Bitcoin, and I look at that to help my portfolio.
Yes, you have been very bullish so far for the past few weeks. You seriously think it's going to get to the 22,000 level?
I do actually, I do. You know, one thing we know about Bitcoin is it can surprise. It definitely surprised people on the way up here. Nobody believed it. Well,
yes,
not
I
nobody,
remember.
but you know, very few people believed it, and it was only those people that had wide eyes that could say, well, you know, I believe my technicals, and technicals are bullish, and the market is gaining strength. Who actually participated in that. You know, it's a great market technically. I've talked about this before. It's a beautiful. It forms wonderful chart patterns. And it's really textbook chart patterns, and the reason for this is it's got no fundamentals. It's purely driven by fear and greed. That's all that drives the price, and so it's the most technically pure market that exists, and that's why the technical analysis works so well in it. The trend lines, the levels, the breakouts, the Fibonacci, it's really, really beautiful from that respect. Other markets, they're spoiled by fundamentals. Fundamentals keep getting in the way. You have a nice head and shoulders, you break the neckline, you start to go down, all looks lovely, and then some bullish news comes out and we turn up. And but here this kind of thing doesn't happen because it's just driven by fear and greed, and so the technicals which measure fear and greed perform extremely well without interruption. Okay, so let's move on to the stock indices now. Let's move on to stock indices now. This is a weekly chart. I'm going to go back to my 2-year view on the weekly chart, just keep it relevant. So we've got a big breakup on the stock indexes here. We've got news, we've got Biden election victory, it seems. Not too much fuss. I don't think everybody expects Trump to cause serious problems. So worry for the market was uncertainty. I don't think there's much uncertainty in reality as to who won the election. And also we've got the wonderful news from Pfizer. You know, we can begin to think things like the pandemic is behind us and we're going to get back to normal maybe before the end of the year or the start of next year, that the vaccine will be starting to be released. You know, that is a very cheerful thing, and the market itself is reflecting that. But the pattern is, yes, it's strong everywhere, but stronger in some places. So here we've got the weekly chart. We've gapped up. That's an unusual thing. But here's the daily chart here, gapping through the high. This is a very interesting day because at the moment we're still currently trading above the high in the US 500. Here we've been much higher. We've come back a bit. But if we can end the session above the previous high, then I think technical analysts will be very pleased about that. The RSI is climbing, the MACD is climbing, everything looks good in the S&P. But I'd like to go on to actually the FTSE.
Oh, Trevor,
actually,
just before we move on.
Yeah.
Trevor, just before we move on, can I just remind people that they can download the handout from the handouts tab? We had somebody already asking to see the charts. So we do have a handout every week now where you can see what indicators Trevor's using, and you can download it in the handouts tab or just on the little widget there.
Yes, and which parameters I'm using and what I use them for. I don't want to explain that every week, so we've produced that handout. Thanks for reminding us about that. Let me show you this chart here, and this is an important thematic change which is going in the market at the moment. The European stock markets have been very, very terrific underperformers this year, since January this year, compared to the US stock market, but it's beginning to change here now. And here we've got the stocks, the European market. Then we've got next the German stock index, the FTSE, and sorry, the FTSE is at the bottom, and the CAC above it, the French stock market. But you can see here's the beginning of the year, and the German market is powering ahead. Sorry, the European stock market as a whole is moving towards unchanged on the year, having been such a lagger through the year. The leader, and obviously the biggest, the FTSE is the biggest stock exchange, but the second biggest stock exchange is the one that is second in this, which is the DAX. So the DAX is pulling ahead strongly. So it's a thematic change. There's another thematic change I want to talk to you about in a moment too. So that we've been watching the American market, but I think the action is going to begin to be in other places. The orphan, of course, is the FTSE here, but it's powered through resistance today. This is a big, big day in the FTSE. Let me show you the weekly chart firstly to show you how important it is. We've had this series of lower highs here, and we've blasted through this downtrend line here, or downtrend channel that we had drawn in previously. And this is a phenomenal breakout for the FTSE to the upside here. So we've powered ahead here. It's still holding up strong, much better than the US stock market today in its just daily performance. So we've got a big candle here, and we're currently near the best level and through the pattern of lower highs. So there's a big change for the FTSE. The FTSE has got a lot of potential catching up to do, and I think there's going to be continued rotation away from the US leading, which it has done for such a long time, for literally years, into other markets such as Europe. Let's look at the German market. Again, this is powerful, but it's not like the FTSE. It hasn't broken out of its consolidation range, and so it is below its highs here, 13,300 here. And so by choice, I would rather go for the FTSE than the DAX. The one I would like to show you, which we haven't talked about before, is the Japan 225. And let me show you that on a weekly chart. And this is something very, very important is happening here. Okay, you can see that on Friday we jumped and broke through this resistance level from the highs that were established at the beginning of the year. But look at this move here, the follow through move here. I'm going to show you something here. I'm going to show you the last 20 years here. Actually, that's not enough. I want to show you more than that. I want to show you the all the data. Okay, so look at this now. This is what we're breaking out of here. We've had these three tops in here, all around this level. This was in 2018, January 2018, October 2018, December 2019, and we've broken those three very important, multi-year highs. But look where we are. We're at actually at a 20. It's the highest price we've been to since 1992 in this market. This is a major breakout here. And I think it tells a big story. I think there is rotation away from the United States, a bit into Europe, but more into Asia and into the emerging markets. So I think as the theme for this year and 2021 is going to be much more that the action is going to be not in the US and in the FANG stocks and everything which we've got quite used to, but a rotation into Asia and the emerging markets. And remember this day, this was the day that really it started there. Now, some of the emerging markets already made big breaks already, but this is, of course, the biggest of the Asian markets here, the Tokyo one. Now, the Tokyo one has put behind it all the trading for the last 22 years is now below it. And then we've got a couple of minutes left before we get to some questions. But basically, I want to go back to Adidas, which I recommended looking at. We looked at closely a little while ago. We had a savage sell-off on it there, but now we're breaking away powerfully. This was the resistance level that we were talking about at the time. It's cleared it substantially. This is going to be one of the leaders out of Germany. But all the stocks that we have talked about since we've been doing these are all making a powered ahead, and they are leaders. But don't forget, I think that Europe is actually going to take much more of the focus. But we had talked about Microsoft, Daimler, these are all in good profits. There is also a sectorial rotation going on. The FANG stocks are struggling. The tech stocks in particular, Alphabet is the exception to that, it's still strong, but watch out for banks. We've hated banks for so long. We're not used to beginning to love banks, but banks are beginning to come back into favor, and I do expect banks to start to lead the market up. They've got a lot. Look at JP Morgan today. It's really, the where's Bank of America here today. We've got massive rotation into the banks. I forgot one thing, which was oil. I couldn't go without talking about oil. Sorry to go back, but let's look at WTI crude. A massive day here. We're up nearly 10% in crude. It hasn't made us break out. It's just we've surged up through the range. The interesting thing about it is that it completed its downside Fibonacci objective here. This was the downside objective, measuring from here down to here, rally to here, projecting down to here. So this 100% here was based off A, B, C, D here. So we got there, and then it reversed as incredibly powerful. Look at this Takuri, this rejection we got here, and now we've powered deeply into the range here. This is, I think, the result of a lot of people seeing crude oil as a one-way street and getting very, very short of it. We saw that on the commitment to traders that the market was extremely short. People saw that the COVID was hurting the demand, there was oversupply. So on both sides of the equation, supply and demand, it was really bad for oil, plus the headwinds it's got, the people trying to use other energies, so sources. So crude has powered through the massive resistance formed over September and October, up nearly 10%. I mean, that's an amazing move. 10%, it's incredible. Watch for 14,190. Which is this level up here, and a breakout of that would be amazing and really, really painful for many traders. And you know how the market likes to cause pain for traders. And then we should go back to the August high at $44 if we clear that and have a wonderful body of support below it. And so the technical picture here has changed very, very dramatically, and I don't think the fundamentals have changed one bit. But the whole the picture here has gone from 180 degrees. All right.
Wow. Thank you,
I
Trevor.
didn't give you a lot of time there, Dan. Do we have any questions you would like? We
Yeah,
feel
we do have one request to take a look at the the Kiwi yen chart if you've got time.
Kiwi yen. Okay. Well, I better put this up on here. If you don't mind, I'll put it in here. Okay, there we are. It's in there. So I always will. Oh, I say, this is yes, good one, good one. Don't tell me this is Noble again, isn't it?
It is, yes.
I recognize his hand. He watches, he knows what's happening. Well, this is great. Thank you for pointing it out and making sure I hadn't seen it. So here's this is a weekly chart here. We've been in this week, this consolidation range here. I'm going to use the parallel trend channel drawer there, and we're breaking out of it here, which would indicate that we should head back to the January high here for the New Zealand dollar. That is New Zealand dollar up and yen down. What a powerful move today here. This is the day here. It's powering ahead and tackling that high, which, you know, it looks from the oscillators that it's going to achieve. Look how the Bollinger Bands are splaying out here as the volatility increases. This is a big move here. So there's an exotic cross. I think it's a very good one. If you know, but if you're long of this and you caught it, well done you. So the breakout point was 70.50 as we break out the consolidation, and the target would have been the high that we're tackling now. But it does look very much like, since we've got no shadow on the top of this candle, that we're going to carry on forward and break out and go back to the January high.
Right, thank you very much, Trevor. No, that's it today, Trevor, for questions. Thank you very much for your time, as always. We thank everyone also for attending. Please join us again, same time, same place next week. And also, please take the time to finish the survey. We've included a new survey this week about the handout that we're offering. Again, it helps us to fine-tune our services to you, so please do take the time to do that. Trevor, do you have anything to add?
No, I don't. I think it's the market's got wonderfully exciting. I think it was a little bit contained while we had the election on and all the Brexit negotiations and things like that. But it's come back to life. These moves, like the move of hurrah for Biden winning the election, they can wear off quite quickly. So watch out for that. But we're in the initial jubilation regarding that, and we can expect good news coming from the vaccines as well. So there's no surprise about that particularly, but we're getting it for the first time. So we're in a sort of hurrah moment, hooray movement moment. So watch out for that fading a bit, but we've got some clear directions from the market where they want to go, and yeah, amazing day that we've got today. It's fantastic. All right, thank you very much, Dan. Thank you very much, everybody.
Thanks,
everybody. I really appreciate you spending the time with us. I hope you benefit from it, and I look forward to reviewing the charts and looking ahead this day next week.
Thanks, Trevor. See you, everyone. Bye-bye.
Bye-bye. Thanks very much, Dan. Bye-bye.
Bye-bye.